You're joining us here on Friday, January 28th, 2022, for yet another market recap. I'm finally rejoined by my wonderful co-host, Bruce Campbell. Thank you for joining me, Bruce.
Yeah, it's been a while since we did this together.
How's your shoulder?
It's getting better. Yeah, getting a little bit more mobility every day.
Well, I guess it's been, I think it was in December 17th was the last time we spoke. Typically, this is a quiet time in the markets as everyone goes to the holidays, but it's not been. It's been a very busy time. And I'm starting to notice that things go sideways every time you're not on market recap for a while. So you can't take any sick days anymore, apparently. The world needs you.
Wow, that's important. A lot of pressure on my shoulders.
Well, welcome to 2022. We're going to talk about a bunch of stuff today, so let's dive right into it. We're going to talk about, as everyone is probably aware, the Bank of Canada did not increase rates. We're going to talk about the Fed meeting that happened on the other side of the border. They did not increase rates. We're going to talk about the equity sell-off that we've been seeing for a little period of time here, how investors are feeling about that. And then, of course, we're going to get into some CSE issuer news. So let's talk about Bank of Canada quickly. We'll touch on this one. They didn't increase rates, but it was made very clear that is not going to last for very long. There will be an increase. So what do you think here and how the markets react?
Yeah, I mean, it wasn't really that much of an event in Canada, the Bank of Canada rates, more so the US than really Canada. But yeah, the thing that we know is that they did say that they're going to be increasing rates, and that that's something we can look forward to for the markets and for all interest rate bearing products in the future.
Absolutely. And then Mr. Powell, he got together with his people. They had their meeting. They reiterated much of what they said in December, which is Fed funds will remain at 0 to 0.25% for now. Bond purchases will end in March, and then they will start to increase rates. So tell us about that.
Yeah, I mean, those were the big takeouts from what his comments were and from the press conference afterwards, that they are going to be starting to raise interest rates. The expectation is that March will be the first move. That's actually come down, though, interestingly enough. If you check back a few weeks ago, it was in the high 90s that most people who were expecting rates to go up in that March meeting, and now it's actually into the kind of mid 80s. So it is coming down. I mean, but I would suspect that they're going to do that unless they see some sort of really horrible economic data. And even at that point in time, they probably still bump up the rates in that March meeting. And then, what they said is that they're going to be increasing rates throughout the year, and that they're going to roll off their asset purchase program. So that stimulus is going to be removed out of the market as well. Initially, it was kind of interesting because initially he spoke and the markets started to move up. And then after the market kind of got to digest and dig through his notes a little bit more, it's sold off in quite a dramatic fashion. It was another one of those big intraday swings.
Okay, so look, we've been talking about this for almost a year now. I mean, this isn't news to us that rates are going to go up, that the stimulus is going to slow down, but the market seems to react to it. It seems to me like they reacted to it like, oh, what's happening? I mean, is that we know this is coming, right?
Well, we have. I mean, they've done their very best to telegraph the thing the Fed doesn't like to do, especially after kind of past Feds and past history, is that they know that if they surprise the market, it never turns out well. So they really try to telegraph what they're doing to the market early in advance. If you remember back, though, kind of mid last year, they were still talking about this inflation being transitory, meaning that it was going to be here and then it was going to disappear once supply chain came on board. They changed that tune part of the way through last year, and since that time, that's where they really started to talk about the fact that they would need to raise interest rates and need to do it, sooner than later to try to control inflation.
Well, I mean, it's a fact of life. It's going to be happening this year. We just don't know by how much. So, and of course, the equities have they've been selling off over a period of time. So, and that is, would you say that that's correlated to the fact that interest rates are going to go up and inflation?
There's a few factors there. One is yeah, you're seeing rates go up, and so there's always demand for return and demand for safe return. And there's a thought that if rates start to go up and they go up quickly, then multiples that people pay for stocks will go down. If you value longer term most growth companies, they want lower rates, or investors want lower rates for them, just the way they value them. And so that obviously caused a part of the sell-off. But another part of it is that there's sort of behind the scenes, there's some thought that we actually may start to see some slowing economic data, and the Fed's going to be raising rates at the same time that the economy starts to slow. And so you end up with a situation similar to what you saw in 2018. And that was when Jerome Powell was first in his spot as the Federal Reserve Chairman. And if you remember, he started increasing interest rates and then did a really quick about face and took them down. And the market sold off in 2008 until the last quarter because of that exact fact. He was raising interest rates when the economy was slowing. When he did realize that, he changed course, and then the market reaccelerated again. And there's some thought and concern that that's what's happening here, is that the economic data is going to slow. If you look at the kind of year over year comparisons, that's where you'll probably really see the slowdown, because last year, a year ago, those numbers were really strong because we come from the previous year where there was almost no economic activity because of COVID. And then, a year later, they were quite strong. And now we're seeing numbers that are probably going to slow a bit from there. And that's the other part of what the market's potentially concerned about here.
Interesting. That image is a pretty scary image, the big chill. Okay. How do investors feel about this? What's the investor sentiment right now?
Well, just like that cover, that's a real good contrarian indicator when the headlines on the cover of magazines, are a certain way, and they, those magazines just want to sell magazines and sell advertising, and so they really try to appeal to what the common sentiment is, and it's showing that big chill. So we're really seeing markets that have taken fairly substantial moves here in the month of January. So just as an example, we've seen 4 weeks down now on the S&P 500, and we've seen 5 weeks in a row down on the NASDAQ. And we're now seeing really bearish sentiment, bearish so much so that we haven't seen it in a number of years. So this is just looking at the American Association of Individual Investors. And you can see here that the number of bears is at, a high that we haven't seen in quite some time. And there's only a few other instances in history where it's got this high. So people are really bearish right now, which from a sentiment standpoint is quite interesting, because you can't try to time around it, but it often means that money's out of the market and is looking for more of a downside, which inevitably never happens, and then they start to come back in the market. We're seeing that from the pros too as well. So we watch another sentiment indicator, which is the North American Active Investment Managers, and it indicates where their portfolios are at as far as 100% invested, or they can be 200% invested, or they can be, all in cash. And they've actually gone from where they were close to 100% invested back 4 or 5 weeks ago now to where they're only about 54% invested now, which is quite a low level for them. And that survey is actually lag delayed information. So we'll see it come down, I would suspect, again next week to even a lower level. And that's a level where we could potentially see bottoms. With the market so oversold, it wouldn't be too shocking to see a fairly significant snapback rally in February.
I mean, look, no matter what's going on in the market and sentiment, money leaving the market is never good, right?
Well, I mean, that typically causes share prices to go down. That being said, corrections are always scary when you're in the correction. We went back and did some data on the TSX, and what we found is from 2009 until now, there's been a correction every 1.8 or 1.8 times per year. So just a little over, and just a little under 2 times a year. And the average correction is actually 10.6%. It lasted for about 45 days, and the recovery was about 150 days on the other side. So they're pretty normal occurrences, but it never feels like that. And we've gone a lot longer since there's been a correction. It really takes us back to, when everything first happened with COVID in 2020. So there's new investors who have never experienced this. And then some of the rest of us maybe have just got a little bit older and we forgot how painful it can be.
That's very true as well. Okay, so we're gonna jump into some CSC issuer stuff. Today we are gonna talk all mining. Few things I wanted to mention as far as the mining space. Traditionally in Vancouver, one of our largest conferences that happen in the capital markets is the Vancouver Resource Investment Conference, and it typically happens around the second or third week of January. That has been postponed. So the new VRIC dates will be May 17th and 18th in Vancouver. The CC is going to have a big presence there. We have a workshop. We're going to be quite involved in this year's event. We're gonna do some stuff around it. So make sure you come and join us there. As well, PDAC. So the Prospectors Development Association, their conference, which is typically March, it's kind of the epicenter of mining. I mean, I think it's one of the biggest mining conferences in the world. It's definitely in the top 3. I just can't remember where it's at. That happens in March. Now, they've had to move theirs out as well, and they have moved theirs out to June 13th to 15th in person and June 28th to 29th online. Again, the CSC team will be there. One of the questions that came up about these moves, though, one of our colleagues on the team, he brought up, typically January in Vancouver and March in Toronto is really this wonderful time for people to go raise capital for their next work program so that by the spring they can be on the ground. So kind of curious if this will affect people's ability to go out there and kind of make the work programs happen this year. Although it doesn't seem to have been much of an issue for people to raise capital. Any thoughts on that? I mean, we've had a few new listings that I'm going to mention, but what do you feel in general about the junior exploration space or the junior mining space right now?
Well, as far as raising money, I mean, there's always a window of opportunity there, especially if you have a good project. And nowadays, we have become more accustomed to doing things remotely. And so, in the past, that had been the case, that you would have, a lot of investors in the same area at PDAC or at the Vancouver conference. And so it was easy to make your pitch and presentation to a number of people. It's probably a little bit more work now because you have to jump online and do, a lot more one-on-ones, but they're still able to do it. So, I think that they'll probably still continue to raise and be able to get the money in the door before they need to start their exploration projects.
Well, and mining has had a bit of a rebound I've seen kind of over the pandemic. So hopefully it keeps going forward. We had 2 new listings that I want to mention. Forte Minerals, it commenced listing with us. It's a copper and gold exploration in Peru. I did not know this, but Peru is the 2nd largest country for copper production and the 6th largest for gold as a gold producer, which is pretty amazing. So good for them. A big part of these projects too are the fact that people are finally able to travel again and get staff onto a property and actually do some work. We also welcomed Highview, which will commence listing. Mineral exploration company focused on acquisition, exploration, and development of mineral properties in Canada and the US. Seeing a lot more mineral projects coming to the CSE. Also seeing lots of financings that are, there's periods of time where people are going out there and doing kind of small programs to kind of keep moving forward, but seeing some bigger capital raises. Are you feeling good about the resource space this year? What are your thoughts?
Well, certainly from a pure market standpoint, you have seen the precious metals and base metals hold in fairly well here throughout this market correction. They've dropped a little bit in some instances, but they have held in fairly well. So if we do see continued strength of the economy and then some inflation, you could see both those really have a strong move here throughout the rest of the year.
That's awesome. I love it. I love this mining space. Okay, Bruce, what do we think about going into next week?
Well, the big thing that we're kind of watching is just how oversold things are, and then also where the sentiment is, and the fact that you've seen that 4 weeks for the S&P and 5 weeks for the NASDAQ. So we it's always tough to figure out exactly when the market's going to bounce, but we wouldn't be surprised if we saw a fairly significant bounce here over the next few weeks.
Awesome. Well, listen, continue to recover well. I hope your shoulder is feeling much better. Thank you so much for joining me. It's our first episode of 2022. We will have many, many more. We're going to keep getting better. We'd love to hear some feedback from anyone who has any questions that they want me to ask Bruce. Feel free to reach out to me. Or if there's any big news coming out from our issuers, let us know. Make sure you let us know and we'll talk about it. Thank you again, Bruce. Have a wonderful weekend, and we will see you in February.
Thanks, you too.